SoFi recently had an earnings report and they beat their EPS estimate by about 14%, which is great news for investors. Unfortunately, the stock went from about $11.45 a share down to $9.40. So the big question is, should investors keep investing in SoFi or should they jump ship? Let's find out. Okay, we're going to walk through the 4Ms and we'll start with that margin of safety. That's the math part of investing. Looking at Tykr, we can see SoFi has a score of 39, but their margin of safety is 90%. We like to see a score of 50 or higher. If this score was 50 or higher, this stock would be on sale, would be green. But the key metric I'm paying attention to is that margin of safety. We're looking really good at 90%. A detail I want to drill into a little bit here, and this is where things could get really exciting, is that net income. Just for context, net income and EPS are very similar. EPS is just net income divided by outstanding shares. So when we go to the financials tab, income statement, we look at net income. I have this flipped to quarters. You can actually go to years as well, but quarters is what I'm paying attention to most. Check this out. You can see a few quarters back, we're at negative 74 million. Then we went to negative 40, then negative 34. We did kind of go in the wrong direction here at negative 47, but when this stock changes to a profitable business, it was in the past, and we want to see profits not only at the quarter level, but at the yearly level, that's when things will get really exciting. We recently saw this happen with Palantir. When Palantir switched from, the negatives to a positive, that's when things get really exciting. So if you are using Tykr, pay close attention to these financials every quarter. I'm going to be watching this really closely. I want to see that negative 47 get really close to zero or even above. This stock could really take off at that point. But overall, the financials in this case, although the stock is not on sale in Tykr, I'm actually going to check this first box for margin of safety because that margin of safety shows this stock's upside potential at $35. This tells us that the overall financials, especially that EPS, it's moving in the right direction. So that's a good sign for investors. But we don't want to stop with the math part. We need to also look at that meaning, moat, and management. So moving out of the meaning, SoFi originally started as a business to help with student loans. I did not love that type of business model. Number one, I don't love student loans in general. Any of you are looking to go to school or you have a child looking to go to school, you're going to take out student loans, make sure you calculate your ROI. I like to hear people getting into professions that have a really fast burn down rate, meaning their ROI is very quick. They have some debt, but they can pay it off quickly. Typically, the two highest paying careers coming out of college, you have finance and IT. Otherwise, a lot of careers, it's going to take you a little longer, so just be prepared. You could be sitting in the trenches for a while. So that's one reason I don't love student loans. And two, to really survive on a business model that's around student loans, I didn't see that as a long-term play for SoFi. But we'll talk about the CEO here in a minute. The idea of expanding beyond student loans was a really smart play. So check this out. Their business model really falls into three main categories. They have a lot of revenue streams within. So the category one would be lending, which not only includes student loans, but also personal loans and mortgages. Then you have category two, which is technology. They have an enterprise platform called Galileo, which large fintech companies use to move money back and forth. It's very costly and time consuming to move money from one location to another. Well, this product, which SoFi did purchase years ago, Galileo, great product. And some of the customers include H&R Block, Monzo, DailyPay, T. Rowe Price, MoneyLion, and Bluevine. Some of these may be unknown, but they're sizable organizations. They also have Technesis, which is a company they bought years ago. And what this does is really bring older banks really up to the 21st century, modernizes how they make transactions and move money around. Some of their customers include HSBC, Original, Relevate, and Tab Bank. And Galileo and Technesis do kind of work hand in hand. This relates to an enterprise software product. I talk about with some of the other reviews I've completed, enterprise software is a really great place to be. It's highly sticky, it's highly lucrative, and you're not manufacturing any kind of physical product. Think about, I always kind of reference and pick on Tesla. You have a lot of metals and plastics and rubbers to manufacture one unit, one car. When you have Apple, sure, it's a lot smaller device to make an iPhone, but there's still aluminum and plastic and semiconductors that go into a product. So just think about that when you're buying something or investing in something. Think about how fast can it scale? If it's hardware, if there's something physical, it can take a little longer. But with software, it's a different story because there's nothing physical. So with SoFi, that was a really smart play to introduce the technology revenue. All right, moving on to category number 3, that'd be financial services, which is very similar to your basic bank. That includes revenue streams like checking accounts, savings accounts, credit cards, debit cards, IPO investing, stock trading, ETF trading, crypto trading, IRAs, and fractional shares. So all these products, or I should say most of these products, they have transaction fees associated. That's a great place to be as a bank, is these small little fees that add up if you have a ton of customers. So overall, looking at that second M, that meaning, I'm going to go ahead and check that box as well. So number 3 would be the moat. How does SoFi stack up against the competition? So we'll actually use Tykr to compare against a few other competitors in the market. Just a quick refresh. We're jumping over to SoFi. We can see the score is a 39 out of 100, a margin of safety of 90%. So with that in mind, we're jumping to our first competitor, which is Upstart. Looking at Tykr, you can see the score is a 67. So going back to SoFi, it actually beat SoFi on that score, but the margin of safety is 0. With this case, I did some homework on Upstart. They actually don't have the variety of revenue streams that SoFi does. So I'm actually going to say SoFi is the better investment than Upstart in this case. Next up, we're looking at Lending Club. Lending Club, they're on sale, looking really good. Their score is 56 out of 100 and their margin of safety of 81%. This is kind of hard to beat. But unfortunately, I see their share price is about $7.74. It's close to SoFi. It's flirting with that penny stock territory. I'd be a little concerned if I was an investor in the Lending Club. I really want to see these stocks break out past 10. With SoFi in this case, because it did kind of fall under 10, it can jump back out pretty quick as well. So in this case, I'm going to put SoFi still as the number 1 choice. All right, moving on. Number 3, we have Green Dot Corporation, another competitor. They are watched. Their score is 61 out of 100, margin of safety of 0. In this case, I would also say SoFi is the better investment. Then we're jumping over to 2 more familiar stocks. We've got PayPal. PayPal has been kind of a dog. This is a stock I've been investing in for years, but they have not been performing well for me. They are overpriced in Tykr, score 44, and margin of safety of 0. I do not plan on selling them. I'd be selling for a loss. But I do have high conviction in the stock because they have a huge range of revenue streams. They're actually located in 200 countries and territories. They just really need to get their stuff together. And they'll be a great stock for the long term. I really, truly believe that. But in this case, for the near term, I'm looking at SoFi actually as the better investment. Okay, moving on to our last comparison here is Block. So a few years ago, Block, they actually announced 50% of the revenue was generated from crypto transactions. And now that the stock market is starting to improve and a lot of people are flooding back into stocks, the same thing is about to happen with crypto. We're seeing some big returns here as of this year to date, as of August 2023. Bitcoin is up about 75%, Ethereum is up about 50%, and Litecoin's up about 25%. And stocks like PayPal and Block, they're going to see an increase in revenue because transactions. So for you investors in PayPal and Block, just hang on, things are about to improve. But SoFi allows the same service. You can buy and sell stocks as well as crypto. So overall, against the competition, I actually say SoFi is a stronger investment at this given moment. So I'm going to go ahead and check that Moat box. All right, and the 4th M, that would be the management. We're looking at the CEO. So That's Anthony Noto. He actually came in, he did not found SoFi. He actually came in and helped lead the company. Now, he has a really solid background. He worked as an investment banker at Goldman Sachs. He also worked as a CFO for the NFL, and he worked as the CFO and COO at Twitter, or X, for about 4 years. Great experience there. He also helped take the company public in 2021. This is a big reason why I like Anthony. He helped expand those revenue streams. See, working at an investment bank like Goldman Sachs, part of your job is to help take companies public. And in that case, you're looking for companies that can really scale revenue without scaling liabilities, much more scalable businesses. And in that case, they're looking at companies that have a lot of different revenue streams. Well, that past business experience really works well. When he came into this company, he's like, we're not going to just offer student loans. We need to diversify our revenue streams. And he was the key driver behind that. He also drove the acquisition for Galileo. That's an enterprise software. And then he did create incentive programs, especially those higher rate of returns in the checking account and savings accounts to bring people into the ecosystem. Now, looking at the Glassdoor ratings, this is something I like to pay attention to just to see what people are saying about the leadership and the company. The score of the company is a 3.8, which is pretty good. I like to see a 4.0 or higher. And then the CEO approval is 86%. I actually like to see 80% or higher. So in this case, I'm going to go ahead and check that box as well. So overall, all 4 M's with SoFi check out. So the big question is this a stock you should add to your portfolio? I would say yes, but I would only allocate a small percentage. The reason is, and I talk about this with penny stocks, when a stock is $5 or less, there's a 99% chance it's not going to break out past $5. That's US dollars. And if a stock is between $5 and $10, there's a 90% chance it won't break out. Now, we saw this with Palantir. It went into like 7s and 8s, and now it's well above that. And we've seen SoFi break out past $10 as well. So that's a good sign. But what I would do is this. If you invest a little, you can do that, but really wait, till it gets above $10. That's when large institutions really become more confident and drive more funds into the stock. And that's when the share price can really take off. So I would probably wait for that. There's a few signals here. So we're looking at that share price for $10 or more. We also want to see that net income go positive. That's another good sign. And then a third sign is this score. Looking here back inside Tykr, you can see the score of 39. When the score gets above 50, that's really showing that overall income statement, cash flow statement, and balance sheet have really improved. That's going to create more motivation for institutions as well, and we could see the share price take off. So I'd love to hear what you guys have to say. If you like this video, hit that like button. If you want to see more like it, hit that subscribe button. And if you want to learn more about investing and see other stocks like SoFi, I welcome you to join Tykr for free. All right, we'll see you in the next video. Bye for now.